The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman here. This is the Tiger Technicians Hour on this Monday, the 25th. Going to wrap it up this week. You're almost done with the month of March. Amazing how speedy these things are. So last night we were looking at about, where was that? Was that last night? Yep, that was last night. We were looking at the futures opening and having a little bit of a pop-up, and then it started to move down. And that essentially said to me, and they didn't move down very sharply. It was almost reluctant. Most importantly, what I'm looking at here, let me just go through the numbers. So the Dow, I'll go through one thing at a time. The Dow is trading down quite sharply, even with Boeing. Let me see what Boeing's doing, because they mentioned that I think it's the CEO is going to retire or something. But at the end of the year, give me a break. End of the year? I think the next hour would be too long. Anyway. That's besides the point. So that Boeing popped up sharply, went to 196.18, and you can see now it's at 191, up only 2. Yeah, that's really not what they should have said. They should have had a much more. I was meeting with someone, just had brunch over the weekend. Good friend, haven't seen him for a long time. Used to work for Boeing, for General Electric airplane engines, up here in Lynn, Massachusetts, retired some time ago. And I said, so what do you think of Boeing? And he said, when I speak to my friends from Boeing, he said, we just can't believe it. We just can't believe what they've done. Anyway, let's just get back to the market. And the market right now is saying the Dow, down 89, got repelled to this Chapman Wave inside track repellent zone. But this is really the most important. Even though we've started to take, once again, some short positions, this is really the issue. The residual strength of the 9-period exponential moving average over the 14 is something you just cannot ignore. It is so important. And one of the reasons why we've remained a core long-term long is because, look, from that November the 3rd, 2023, that green line turned positive, and it held positive all the way to this very minute. Even when the Dow pulled back sharply, it never went pink. In other words, the 9-period never went under the 14. So this is really, as I say subscribers, this is a work in progress. Slowly but surely, we'll start to hear some bad news that really is important in terms of what the market how the market responds. So far, it's not taking things too seriously. Anything that's said, yields are still quite high, but that hasn't affected the market. The dollar's been rallied. That hasn't affected the market. Even the news is kind of shifted off to the background. So let's go to the S&P and see the same thing. Here's the S&P. S&P right now is down, not as down as much as it was a little earlier on. It's down 9, almost 10, at 5223.69. And you can see that 9, it's not even flickering. It is just sitting there beautifully over the 14-period moving average. And in this particular instance, you can see all the way from the 6th of November. This green line has remained long. You can have all the books in the world. You can read I Get Stocks and Commodities magazine. It's got all these different technical, automated, unautomated. It doesn't matter what it is. One technique, the 9 over the 14, would have kept you in all these positions. And even me doing this work on a very intraday basis, short-term, long-term, intermediate-term, very long-term. The temptation to short is right there all the time. Look, now the SMH is up 10 cents at 227.78. Holding the 9-period moving average, almost went pink, didn't go pink. and it's still very strong. So let me go back to the charts where I can show you the daily, weekly, monthly, since it's the beginning of the week. Let's see. The month ends on Sunday, so the 28th, Thursday, will be the last day, because 29th, I believe, is a holiday. Yep, is that Easter? Friday? I mean, Good Friday? I'm not sure. I think there's a holiday on Friday. So we've got a shortened week. So with that said, let's look at the results now of the first 45 minutes, almost 45 minutes of trading. S&P now down only 6.5. It went to the Chapman Wave inside track repellent zone right there. It got pushed down slightly for 2 days. Well, today's the second day. The day's young. Anything can happen. Look at the QQQ down $1.44. Had deeper pullbacks, but still, it's just barely off the. Oh, I forgot to type it in. This is a 449.45 or something. Let me just check. 449.34. 449.34. Let me type that in. 9.34. And that's the most recent all-time high. So I can see residual strength. And that residual strength says, if you are looking at any indicator, say in the QQQ, in the Invesco QQQ Trust Series, which basically is the Index 100, you want to see for conviction that this is really turning down. You want to see the green 9-period moving average not just go under the 14, but it has to expand so the distance between the top line and the bottom line, the aperture, is really quite wide. And you have to see the QQQ close under 432.74, which was the low of the 15th of March. We're not even close to that. So as I say, I think this is a work in progress. Now, I want you to just go back for a moment and say, in the Chapman methodology, from a buy signal to a buy mode, from a low point, if you get upgraded, whatever it is you're following gets upgraded to a buy mode, it should go to at least a D. Well, we're already in leg D in the weekly chart of the QQQ. But wait a minute, the S&P is only in leg C. Leg C, and we're only a couple of points away from an all-time high. 52.61.10 was the all-time high, and here we are at 52.27. You could break above that in an eye blink in this kind of market. So, as I say, I think it's a work in progress, and that until we really get he has the Dow. The Dow is in leg C. Also, 3988 is a little bit further away from the all-time high. It's 500 points, exactly 500 points away, but it could do 500 points very easily. So what I'm looking at here is IWM, the Russell 2000, already at a peak D in the weekly chart. Lows are made together in unison. Tops, even shorter term, not very short term tops, very often short term tops has everything turning down just about the same within a few days of one another. You're talking about days, but it could be weeks. And I'm looking at this and saying, well, if you're looking at the rotation, the IWM is already at a peak D. So, and the others are at peak C, and you've got the QQQ in leg D. Interesting, huh? I'll be back in a moment. Dow's down 81.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the US futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. So we're looking at S&P Select Tech Spider Fund, the XLK. We made a peak E already, and it could even be an instant restart in the weekly chart, holding very nicely. Made an all-time high in the 1380, was it? Let me just check what that was. 21235. 21235. Let me just type that in. So it's down just a little bit from that, 212.35. You can see this high-level consolidation right here. In other words, a sideways kind of rectangle formation, digesting gains. Now, the longer this lasts, the greater the chances are it will take out the low of 204. That's really the way I look at it. Unless not only does it go above the previous highs, in other words, 212.35, but it really starts to get close to the 215 area, and it has to do that now, this week. If it does that, that's really impressive. I think it's going to struggle a little bit. Here's another one that I'm looking at. We're looking at, so I didn't finish the other areas that we were looking at. Let me just show you. Gold is up 20 at 2,180.5. So I've been doing quite a bit of looking at the charts, studying the gold, and trying to figure out what that huge move was. That we know what it was. It was kind of Fed inspired, just for that very moment. Back on that Wednesday, was it 2 Wednesdays ago? And it's held very nicely. And if you're looking at the weekly chart, so I'm trying to put together the scenario that says, and I have to put gold together with the silver. So gold is at 2180, silver is at 25.000, up 157, having made a peak D already and got repelled at the inside track repellent zone of the weekly chart. Monthly chart just is sideways. Is it a gold phenomenon? Are we looking at, so I read quite a bit, heard, went just listened to different scenarios. So there's a tremendous amount of shorting for months in, let's call it the smaller type trader. But countries, and this is something I always look at and I talk about it and I say, countries are the ones who get nervous about things, who buy gold. They look at it geopolitically, they look at it just financially, just other ways of looking at it. So at some point that's going to resolve. So I just wanted to mention that as something that I'm looking at. I'm not sure I understand it 100%, but I'm getting an idea of it. I'm getting an idea of why gold is still holding well and silver's not participating as well, because gold is really the preference in this particular instance. But then put it together with the DXY, which is the dollar. Dollar's held very nicely. If you look at the weekly chart, you can say, oh, yeah, it's nice, a bit of a rally. It's nothing fantastic. It hasn't gone to even the 60% level in a rally. So it's just kind of sitting there in the middle of the 50% area from the high that was made back in last year, October-ish, and all the way down to the low that was made in December. So, and you can see the monthly chart looks like an arch, one arch. It might make a second arch, but nothing great. But it is holding well. If you look at the EUR USD, you'll see that today there's a little bit of a rally, but it went all the way back down to the 200-period moving average. Kind of looks like a failure pattern in the weekly chart, failure pattern in the monthly chart. And if you look at the USD JPY, that is the yen, that is trading. USD JPY, that is the yen, trading up near the high level. 151.60 was the all-time high, not all-time high. 151.94 was the all-time, major high that was made back in 2022, comes tumbling down, or was it 2023? No, 2022, comes tumbling down, and it's retested the 151s twice now in 6 months. Good action, right? So something tells me that there's a kind of a convoluted economic analysis that you could make, but to make it as simple as possible, so far, dollar's holding okay. The yen is holding quite well. The euro's kind of weak. Gold is holding very nicely. Silver's not as strong. And you just have to put them in separate categories. And if you look at some stocks, we had a Tiger say, why don't you look at MUX, MUX, that's McEwen Mining. Or don't you want to look at something that makes money? Well, it's doing very well. I spoke about this a while ago. It was down in the 8s. And I said, yeah, this is doing very nicely. And how would it tackle and treat the 200-period moving average? Well, it's just done that. Last week, it touched it, and today it's above it. And it's it made a peak, be in the monthly chart. And if it can go just 1 penny above the high that was made back in April of 2023, almost a year ago to the week almost, if it can go above $10 to 10.01, that starts a leg C. So that's really what I wanted to mention here, that individual stocks in the gold area are doing their own thing. Some are very strong, some are really not that great at all, and some are just not participating at all. So so just to cover that, yes, you've got a particularly good stock. That's looking very good. So I did that. Let's look at high-grade copper. High-grade copper is pulling back after making a peak in the 4.16-ish area. There it is, 4.03, up just 0.02. The weekly chart is improving. It's not great. The monthly chart just looks sideways at best. But you remember we looked at FCX, and that had done really well. Broke above its resistance line. Monthly chart looks good, sideways, but higher highs and higher lows, hopefully. And the weekly chart, higher highs and higher lows. And a buy mode is in place. It should go to a D. And the weekly chart, daily chart, has gone to a peak. Today's high is 46.49. And the last high that was made 4 sessions ago was 46. Right, there it is, 46.46. So we've gone to a higher high. I'm calling this leg F for now, but it could easily be an instant restart. That's good action at SCCO. You remember we were looking at that. Oops, type it in over here. So with all this said, and the fact that I've once again just tiptoed into the short side as a trade, most of our positions are still doing really nicely. Wait a minute, just before I say that, Southern Copper is making, I believe, if this could be an all-time high. No, I think it went higher. No, this is an all-time. Well, let me just scroll back. Yeah, I'm calling this an all-time high. If it isn't, it's certainly higher from the last 20 years that I can see. SCCO trading at 105.48, up $1.14. Now, it's really important that high-grade copper is acting as well as it is, and that the copper stocks, you see, this is fascinating. I like to see when the stocks of a metal move higher. And it's really suspicious to me, and I've been talking about this for a while, that gold is moving up, and yet the majority of the stocks are not really moving high. If you look at the GDX, trading right now, up 77 cents at 30.37. Looks like it wants to still go to a leg D, but then it's going to deal with this inside track repellent zone. And if you look at the monthly chart, it's not too great. So I want to see the gold stocks moving, not commensurate to gold, but even better. That's fabulous. All right, I'll be back in a moment. Dow's down 97, S&P's down 8.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of Basil's educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
So let's just look at this. I had questions. I want to get to the questions as I mix them in with the overview. And I'm looking at BCLI, which is, I believe, Brainstorm Cell Therapeutics, trading at 0.6824. This is obviously not for everybody. This is just for a very specific question. Please review BCLI through the lens of your gap analysis. If today can hold and build, it's a weekly bottom, my ideal outcome from last week. So this is a stock that once upon a time, and that once upon a time was around about October of last year. Was it last year, 2023? Yep, that was last year. Was trading at 0.14. I would say 0.14 is called 14 cents. However, if you're looking at a 14-cent stock, and then it goes to peak B, week of the 8th of December at 0.44. That is a whopper of a move up, but then it gives back a little bit. It goes to 0.16. So you got to be prepared for a lot. And then it squeaks to a high that was made today. It's up 10 cents, up 18.58% at 0.6759. So Dan who does a lot of work in the whole idea of especially the therapeutic stocks, anything in the biotech, the small biotechs, cancer rate or whatever it is. In this particular instance, Brainstorm Cell Therapeutics has had, and it looks like news. So now the question is, let's just say that this is not 10:32 a.m. on Monday, the 25th Eastern Time. It is 4 o'clock and the market had closed. Then the most important thing is if you're looking at a candle that is a daily candle, to talk about it as if it's closed is just so silly, especially a stock that's at 0.65 cents. But if you look at this candle, it's a Chapman wave Roman candle as it stands right now. As I say, if this closed at 4 o'clock and was this, then I would say to you very simply, this is a leg B. It could be an alternate count where it's still carrying over from that long sideways move. Now, I love long sideways moves like this. It creates a little mini channel. And the narrower the channel, this is actually quite wide because you're talking about a penny stock. But the longer it goes, the moment it breaks out, normally you're looking immediately not just at the left side highs, but the major high that was made. And that major high was at peak E right here on the 30th of January, 2 months ago, at 0.4196. So this channel, the breakout is actually, I still wish I had the wherewithal to be able to grab that as the low, take a trend line like this, and then make it a circle like that, or at least in this case, a semicircle, because it would come out almost to where we went to the high today of 0.7927. And that would say that it's rallied enough that if it was able to go just a tad higher than today's high, then the 200-period moving average, which it hasn't been to just for months and months and months, of 0.82 would be in focus. All right. So with this said, we're not doing that. It's 10:34. In the 2 minutes we're talking, I'm still talking. It's already dropped from that huge 18% down to only up 14%. So what I would have said is, if it's able to hold, and since it's a biotech, I'd have to give it even more time. We can't just pop there and install it. I'd say 90 minutes to more, 90 minutes to 120 minutes. If it could hold about 0.715, there's a real good chance it'll retest the high of today, maybe even break it, and then you'll be talking about 0.82. If on this move down, it closes any 120-minute chart bar, that's for 120 minutes, if it goes underneath today's low, or that could still be today, but even if it's today, under 0.59, you've got to be careful. It's probably going to fill the gap and then mess around in this candle from Friday. So I can't talk to you as if it's the end of the day. I can only tell you right now, if I had to go to the 120-minute chart, and I'm just doing this because it's a great exercise in technique, right? So this is a peak A. Whoops, that's an A. That's a B. That's a C. That's a D. That's an E. And it's a peak E in the 120-minute chart. This is slightly different. The MACD is good. The stochastics at 86%. And it says if in the next 10, if by noon, between noon and 12:25, I got to give it about 25 minutes. If it has a rebound and that rebound takes it to the 0.668 area, that's very good action. That just says all the selling, that would be the normal nervous selling, is now being reverted to buying, and that's giving you a nice cushion. And then I would say the 0.62 area should be very strong support. I hope that helps you. Looking out on a weekly basis, I really have to wait for the day to finish, because if it gives back a huge chunk, it's going to change the weekly chart completely. But the 9-period moving average, for the very first time since about June of last year, is crossing positive, but the week is only an hour in. I have to wait for Friday. But that's the first time you see an L. In other words, the 9-period moving average has actually crossed positive. So that's a good sign. So hope that helps you. Next question was Tesla. Basil, I have April 175 puts. So that's, if I'm correct, you're talking about April, the third Friday, which is the 19th. If that's the case and you're looking and you have the 175 puts, I'm way more comfortable than if it was just this Friday, because this could be a kind of a shaky week. But as I see it right now, it tried to rally. I don't know what the news was. It went to 175.25. And Gary had sent me more stuff about EVs in China. XPEV, XP. Am I correct saying XPEV? Yeah, XPEV. Yeah, XPeng. This is XPENG Inc. Designs, develops, manufactures smart EVs. Look at that. I spoke about this the other day. I said this is the Chapman wave inverted inverted falling axe formation. Let me see if I can get that right here. I need to show it to you. In fact, I grabbed it. It was the one that was sitting there just beautifully. I said, look, this is the one I'm looking at. And and this is EVs, and China is going to try to flood markets with the EVs, even if they take a loss, because it's a government business. It's not private. And I took my falling axe formation a long time ago. I inverted it, so even the words are upside down. And I said, if you come down sharply, and gold, the GDX has often had this pattern over the last 2 years. If you start to see higher highs and higher lows, and then it stalls, what is usually the cup formation, but this is inverted. So it's the arch formation can form, and if it takes out the bottom rising trend line, you can go 1-to-1 to the downside. That could say that you can even take out the left side low. Oh, is that a break? Yeah, that's a break. All right, we've got a break coming up. So that's the one. Drew it in the other day, the arch formation. So let's go to Tesla when we return, and I'll talk about that. Basil Chapman, Dow's at 116, S&P's down 10.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, You don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, folks, we're back. We're looking at Tesla down 81 cents at 170.00. And the question came in. I have the, one, I can't remember now which it was. Tesla, I have the April 175 puts, and it's trading right now at 170. So you are, or I believe you should already be in the money, right? So I like what you have. Normally, I'd say take a little bit off. I don't see a reason for that. The technicals are still very weak. The reason why I wanted to go to XPEV is because that's not the China equivalent, but that is the real competition, as I understand. There are some other companies as well. And I don't see anything in Tesla since the weekly 200-period moving average was such a strong repellent back in the 199, 198 area for weeks. And now we are quite far away from that. Even if there's a bounce, I think that you're looking at another few weeks to go, another 3-4 weeks. I think you got a really good position there. I would actually suggest to you that if Tesla by Wednesday it hasn't gone above 170, closed above 170, let's call it 178 to start a leg C to the upside, but instead it's getting closer to the 167 area, you might want to just start positioning in your mind, just having some kind of maybe even just a mental stop of some portion of it to maybe take profits. And then I would even think of putting that back. And the putting back would be is if right now Tesla has no real bounce that it can hold, and it goes very quickly to its 180, the 180 to 181 area is absolutely key support. If it goes to, say, 167 in the next couple of days and then has a bounce towards the 170, so 160, goes to 167, and then has a bounce towards the 173, 174, you might even want to add, some more puts to that side, because I think it's going down. So I agree with you, yes. Next question came in. So I had this question over the weekend. I spent some time on it, and I got to review it as a question more than a statement. And it's about Berkshire Hathaway when it was once upon a time. I'll do it in the monthly chart because he was talking more about the daily chart. Going to the monthly chart and talking about it in 2012, the breakout it had, the chart formation that he's looking at is extremely similar to NVIDIA. And I think if I got the question, Jason, correctly, your question is NVIDIA only in that 2012 period? And here it is, I believe it's at all-time highs right now at 960, 0.07 in leg C in the monthly chart. And the answer has to be, if everything that I'm hearing about in NVIDIA is correct, that they really are kind of not only just the benchmark, but they are the kind of the bellwether, they the breakthrough that has lasted until now in their particular area, chip area, then I would say yes. No, it isn't an all-time high. It's just underneath the 974 all-time round number all-time high of the I think it was around about early March. So yeah. So if that's the case, I kind of agree with what you're saying, except we're talking chart patterns. But I think we need to talk specifically about Berkshire Hathaway and Buffett having become the icon of American. It isn't just industry, it's every part of the American economy. And that really is the issue. And that says to me that you've got to think of Berkshire Hathaway as a leader, as an incredibly difficult thing to do. Just genius, just brilliant to be able to run companies. It isn't like he's just buying the stock. In many cases, he's run the company. In many cases, he has quite a formidable position. So the leaning tells the company they have to do certain things. But in the meantime, back at the ranch, they're very different. NVIDIA is in the area of the Standard Oil, Mobil Oil of the 1900s, and where oil was basically in everything that had to do with petroleum products. So NVIDIA is in everything that has to do, that's really important in the semiconductor, the chips. So I agree with you with the concept. The pattern itself, I'm going to do a little work on that, and I'll have to check it because I didn't go to the daily chart of that period and do my Chapman wave notation. I have done it previously, but I had lost that information, so I'd have to redo it. So yeah, it's on my plate, and I'll do it. Next question came in is RRC, that's Ranger Oil, I believe, or is it Range Oil? Range Resources, up in leg D. The daily chart, only a leg C in the monthly, but weekly chart. The monthly made a high back in October or so of last year in the 33 area? No, 37.88. Sorry, 37.88. And now it's at 33. So it's improving a lot. It's walking the 9-period moving average in the monthly chart. That's fabulous. I like it. That's why I've got subscribers in this area. I like it. Range Resources, I forgot to say exactly what they do, but I think, I don't remember if they're exploration. So let me just put this now, and it's called Range Resources. I type in Range, R-A-N-G-E, Resources does, ? And it tells me operation focuses on stacked pay projects, never heard of that, in the Appalachian Basin, where we have assembled an industry-leading acreage position. Effective shale development is a long-term commitment that requires significant investments in planning, engineering, and people. Yeah, this is acting very well. I suspect it will test the high that was made, that 38 high that was made last year in an arch formation. But it has to hold for 3 weeks now. I'll give it a whole 3 weeks. It mustn't close under 3150. If it closes under 3150, it's going to take a longer time to build that upside action. If this week by Friday, anytime this week Friday, if it's touched 34.30, I think that's really nice action. Yes, I do like it. Another question came in. In the Tiger YouTube. Oh, Lord. Yeah, let's see what MU is doing. This is Micron. Did I type it in the wrong place? Probably. So let me do it right here. MU, Micron Technologies, trading up 7.53 at 117.76. Monthly leg C. Weekly is a leg F/B, and the daily has gone to a leg E. Absolutely fabulous action. What was the next one? Myrna. So this is Myrna is Moderna. This is in the biotech area. It's trading. Why is it not coming up so quickly? Moderna is trading at 107.96, up 2.53. Yeah, this is good action. I think that Moderna there's a lot of heavy weight that I can see on it's WAIT and WEIGHT in Moderna. It should kind of get off the ground and hold to be able to get to the 127 weekly 200-period moving average. I think it's going to need a lot. So by Wednesday or Thursday, if it's able to hit 112.50, that's good action. I don't want to see it under 104. I'll be back.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So let me just tell subscribers that I will send out, I made a little error, not a little, it's an error, in one of our positions that we took this morning. So far, everything's okay. But I said to take something off it if it got to a certain level, and that's that I have to correct. So there'll be a correction going out in the next 30 minutes or so. So in the den, Z asks, SSCO in monthly chart will rally decisively exceed an A, B equals CD target. All I can say is that using techniques that I've developed over the years, this is, I have the Chapman Inside Track. In this leg C, in the monthly chart, it's actually a G/C, and it says it's in the inside track right now. The monthly chart still has 4 days to go, but it also has a resistance level of 111.02. The pattern that I'm looking at invariably exceeds this very long-term from 2014 trend line, diagonal trend line to the upside. We've seen that quite often. It exceeds it, and then it creates a high-level consolidation. So that says, yes, it might be short-term, kind of overbought, and that's what I'm looking at right now. It could be pulling back a little bit. That's the way I'm looking at it. So let me just do a couple of things. So my webinar was released on Thursday and Friday. I also did an hour-long, it's just over an hour, a video on Friday night for subscribers, just going through. And the more I look at these charts, the more I'm saying that I'm beginning to see some deterioration in some of the technicals. But until the SMHs, the semiconductors, which now is up 37 cents, just in the inside track repel. Oh, this is exactly what the chart I wanted to show you. This is the chart of STCO, which says chart pattern that you can use. Look at this long-term trend line. When it breaks above it, it comes back, retests that. So that's what I'm looking at that. So in the semiconductors, if there is a pullback for some reason, whatever the reason, at this peak, gray peak A, we'll be watching it closely. Stay tuned for Steve Rhodes and great programming today.